Hey, good afternoon, everyone. Okay, it's been a week since our last video, so let's just jump in and talk about a couple of really high-level things here first. So it's November, coming up on the time of year when we tend to find a little bit of strength. And that strength is usually associated with demand type news. So the question begs, why would we turn weaker and start a move lower during this time of year when seasonally we should be finding a bottom? Well, here is why, and I'll pull this balance sheet up. I'm not going to belabor this for you, but here's the deal. Trendline yield next year is 184. And if we plant 91 million acres, hold demand the same, that puts us at 3.1 billion bushels, which is a billion bushels more than where we are right now. So why would we go lower? Well, the reason is that that's really burdensome, and the market may want to redirect some of these acres, or at least or try to generate some demand in order to bring that down to a more manageable level, like 2.2, 2.5, something like that. And so what that does is puts less pressure on beans to go higher. So remember, the market's got a really complicated job to do between now and March, April, May, as you guys go through your planting decisions and those kinds of things. And so the market's got to press and find pressure points that are going to push those acres around. So we can't predict how that's all going to end. I'm not trying to do that at all. But for those of you that are looking for understanding as to why the market might be doing what it's doing, that would be a reason why. And a reason why it wouldn't do that is something like the dollar's breaking, there's demand out there that we don't know about, or South America gets so hot, so dry that it actually causes yield damage. But that argument has been hard to trade the last couple of years, because the reality is that as the weather gets tougher, our genetics and tillage practices just get better. And so, you guys have gotten really good at farming through drought, and that's being proven month after month in USDA reports with bigger yields. So that would be a lid to higher prices is better farming practices and better genetics that make things more drought tolerant. And the same thing is happening in South America too. So a lot of the bullish factors that have been in the news lately just aren't really there. But hey, guess what? The market has been telling us this, and here's where we are today, because that's really the only thing we can do is trade from where we are, which is here on the right side of this chart. What are we dealing with? You've got this big reversal here from November 13th, and then 6 out of 7 days you have reversal day here, a little follow through, followed by a big reversal, big outside day down. It's 2 out of 3. Here's another reversal. It's 3 out of 4. Here's another reversal, 4 out of 5. Here's another reversal, 5 out of 6 days. Then you have a long upper shadow followed by another reversal. And then you have and this is actually what's called a piercing pattern. And then this one became a 3 inside down, wherein you have this bar, 1, 2, 3, and that's a reversal pattern. Now that's followed by today by a third consecutive bearish full body on the candlesticks that are bigger than the prior two, which is a 3 black crows. So you've got a lot of reversal action, very, very choppy, very whipsawy, and now a 3 black crow formation, and we are breaking away from this area of congestion right up in here. So it looks to us like corn is heading lower, and there's no reason to think it won't until it gives you some sort of another type of reversal action, or breaks back up above this hedge line. So what would typically follow here is 3 to 5 more days of down, or could even be worse. And if you look at what's happening in cattle and some of the other contracts, then it can be pretty weak. Now this is March corn, so where are we? A lot of you were in December puts last week. Now you are in March puts. We're in 480 March puts. Some of you are short calls up at the $5 level as well, which I think is a great position to be in. You can buy those short calls in if it starts to show some reversal pattern or whatever, in order to open the upside back up. But in the interim, we've been hedged. We want to stay hedged. There's no reason to lift that. Now, if we look out into DS24, it doesn't look a whole lot better. In fact, we've been showing you this wedge that's been forming since last May. And what did we do Friday and today? Well, first thing you should notice is that we broke below it. Second thing you should notice is that we didn't close below this low on November 13th like we did in the March. So there's a little bit of intercontract divergence there, which doesn't mean a whole lot because a lot of times the further out contract will break slower than the front month. But what we do have is a reversal pattern at the bottom of this this downtrend line or this wedge line. We have that's a full reversal. You have the 3 inside down pattern and the 3 black crow pattern here as well. So what we really don't want to see happen on corn is for this $5 level to hold, to give way. You can see there's lots of reasons for that, right? I don't need to belabor how what that would look like. If it does go, then I would expect to move down to 480, possibly a little bit worse here before that happens. Again, why would December 24 corn do that and do it now? Because I just showed you the balance sheet. That's 3.2 billion reasons why it would go ahead and do that, and there's no reason for it to go higher until something knocks it off of that analysis. Okay, because it's got too many acres to gain. So now your next question is, well, hey, but what about beans, right? Beans are bullish because it's so hot and dry in Brazil. Well, here's January soybeans, and you can see what's happened. We had a false breakout upside up out of this base channel. We had a false breakout above this downtrend line, and we reversed, and now we've broken out the bottom side of it. That's not good. We don't like to see that at all. These areas of chart support failed to hold. Now, we do have a doji, which means that we opened and closed at the same level. And we do have a red 13 here, which could be bullish. But given that we're below this trend line, I see no reason to jump onto the bull bandwagon here until we're back up above 1348. Let's call it 1350. And then we need to see this 1335 level hold. So this is kind of your band right in here, 1350, 1335, that we need to hold that. Kind of like corn, how we had 6 whipsaws out of 5 days, or 6 out of 7 days on the corn market. Look at what beans have done here in the January contract. This is your 1325 to 1390 range. Count them: 1, 2, 3, 4, 5, 6. We've traded that range 6 times in 15 trading days, and now today for the first time we've closed out the bottom side of it. So that's problematic for beans. I don't want it to be problematic for beans. I would like it to be going higher, but I cannot ignore that we've traded that same range and now we've broken out the bottom side. If we're going to go higher, we got to do it quickly, sooner rather than later. Otherwise, $13 is next up, and below that, something worse. So beans really have some work to do. New crop beans aren't really any better. We don't have a 3 black crow. We don't have the same type of formation, but we have the same situation, right? We have 1, 2, 3, 4, 5, 6 times between 1280 and let's call it $13. We have 6 times that we bounced around in there. We're caught in this ascending triangle, and typically price would go out the direction of the slant of this wedge. So typically that would resolve itself higher, but it hasn't yet. And so a move below today's low is also going to be below this trend line, which is going to be bearish in and of itself. So that makes me really nervous for beans, especially if corn continues to work lower. Why would it go lower with all the bullishness in Brazil? Well, it's that corn balance sheet, guys. It's too burdensome to let beans really just unleash, because they don't need to. They're already at a high enough level relative to cheaper corn that they don't need to go a lot higher. So that's the bearish case. If we do break out the top side of this thing and these markets turn, then that means something is going on that we haven't learned yet, and that's great. We'll roll with it. But so we're not sounding the alarm bell yet on beans, but we're out of old crop and we're waiting on new crop in order to sell it. I hate being sold in November, the year before, a whole year ahead of harvest, but it is what it is, and we can't let these levels disappear from us. So we got to sell it if we break out the bottom side of that. Okay, now let's talk about our best friend wheat. Here is wheat from DEES 24 or July 24. Just we just keep pulverizing wheat. Just bigger down days today. Export inspections were terrible. We're out the bottom again. There's no end in sight here. 3 black crows after the reversal pattern. We can't call a bottom here at all. And even though we do think the fundamentals are bullish wheat, market doesn't care. This whole thing right here should serve as validation to you that anything can happen in a market, and the market can stay bearish way longer than you want it to. We've thought that wheat should have bottomed multiple times through here. Fundamentally, it should have. You see this divergence action coming through here. It still just has not yet manifested or resulted in better prices. And so it's just going to keep going down. So we get that. We hate it. We see the frustration, but it is what it is, and we can't do anything but trade from where we are. And so obviously $6 has got to hold in July 24 wheat. If it doesn't, then we've really got to be quick to protect it and hedge it, and we can re-own it with calls or do something different. I don't like being a seller here. I think it's oversold. I think we're diverged. I think we've got a lot of reasons why we should go higher, but the market does not care what I think or what anybody else thinks. It's just in a sell mode, and it could be foreshadowing and forewarning what corn is doing, which is why we want to be aggressively hedged corn and aggressively hedged beans to prevent this from happening in those two much bigger crops. So it will rally. It will have a rally that lasts more than a day or two, and it'll be sizable, but I just don't know where from, and it certainly didn't start today. So maybe it'll happen tomorrow, turn around Tuesday. You never know what might happen, but it didn't happen on Monday after Thanksgiving for sure. We will see what happens. Hope is not a strategy at all, but you just have to accept that this is what's happening, and the next most likely thing is a sideways to higher move, but it's got to get to a point where sellers are exhausted first, and we don't think that that's quite happened yet. Okay, that is a lot of bearish info. I get that, but price is what it is, and our job is to trade the right edge of the chart. So we'll take it a day at a time, and we'll let the market tell us what it wants to do. Remember, there is risk trading futures and options, and you should only do so in light of your own financial condition. We will be back with you Wednesday or tomorrow if market conditions warrant it. But if you have questions, please call us. We're happy to talk through any position that you might be in or need to have on in order to make yourself more comfortable. Have a great night. We'll talk to you later. See ya.